Hello and welcome. Thank you for coming to watch our video today discussing GASB 103, Financial Reporting Model Improvements. My name is Vivian Vandenberg, and I work with the local government support team here at the State Auditor's Office. On today's video, we're going to start by going over the new GASB statement at a high level to give some background of the project. Then we'll move into discussing the improved sections to the financial reporting model. This video will close out with a brief discussion of where to find additional information on the project. Let's get started. As promised, we're going to start by covering some background details of the project. The GASB began this project in August of 2013 as a re-examination of GASB 34 for the basic financial statements and management's discussion and analysis, also known as the MD&A. The GASB has in place a process to address these types of projects, and after many years of following the process, the GASB published a preliminary views of the statement in September of 2018. Following their process in place at GASB, they solicited the opportunity for feedback from stakeholders. After receiving that feedback, the project underwent some significant changes to the initial plan, which resulted in an exposure draft being published by the GASB in June of 2020. The board adopted and published a final statement for the financial reporting model improvements in April of 2024. That brings us to where we are today as we analyze this statement and prepare for implementation. GASB 103 addresses several areas of improvement to the financial reporting model. As seen here, you'll note that improvements are being made to management's discussion and analysis, known as that MD&A, the presentation of major component units, budgetary comparison information, the statistical section, and the proprietary statements. Additionally, the GASB has provided clear definitions to terms in the financial statements. Those are improvements to operating revenues and expenses, non-operating revenues and expenses, subsidies, and unusual or infrequent items. We'll cover the details of each of these improvements throughout this video. This GASB statement will impact many governments. It will be implemented by GAAP reporting governments that report an MD&A, proprietary funds, major component units, the budgetary comparison information, financial trends located in the statistical section, and unusual or infrequent items. When are these changes required to be implemented into the financial report of governments? This is applicable for fiscal years beginning after June 15th, 2025. That means that if a government has a June 30th fiscal year end, then implementation will first impact fiscal year July 1st, 2025 through June 30th, 2026. Governments with a fiscal year end of August 31st will implement for reporting year September 1st, 2025 through August 31st of 2026. And governments with a calendar year end of December 31st will first implement for January 1st, 2026 through December 31st, 2026. Now that we know a little bit of the background, let's jump in and start talking about the details of these financial reporting improvements. First up, we're going to talk about the MD&A. The improvements of the MD&A under GASB 103 are intended to provide a more easily readable and understandable analysis of the financial activities of a government. The MD&A is already required to present a comparison between the current year and the prior. However, with this statement, the GASB has put an emphasis on discussing why the balances have changed between the years rather than just stating the dollar or percent change that has occurred. Preparers should use professional judgment to evaluate discussions being included in the MD&A to ensure that if duplication is occurring, that it is actually necessary. The MD&A could have repeated information based on the relevance between multiple sections. Let's look at an example of the MD&A improvements. Here's the discussion included in the MD&A. This specific area discusses tax revenues. It says, tax revenues are the largest source of revenue within the governmental activities, making up 70% of total revenues. Of this, the government noted that property tax revenue increased by 5%, or $500,000. Sales tax revenue increased by 6%, or $1 million. And utility tax generated from the sale of the city's water and sewer services increased by 9%. With the implementation of GASB 103, this discussion can be improved by adding some additional details. So for property tax revenue, we now know that there was a 1% increase in the base tax levy, and also contributing to that 5% increase, it looks like there was some new construction that added to the total assessed valuation within the city. Now for sales tax, it looks like there was some significant growth in employment opportunities in the city. Also, inflation has led to an overall increase in gross taxable retail sales. And for that utility tax generated, it looks like the city was increasing the water and sewer rates by 5%. And it also appears that there was an increase in the water consumption within the city. These are ways that you could improve the MD&A's analysis so that you can provide further details to the readers of the financial statements. Moving on to the major component units. There's a couple of options for how to display this information. The options are to 1. Display each major component unit in the basic financial statements, or 2. To present the major component units as combining statements following the basic financial statements. In the statement, GASB has been specific that option 2, also called the alternative method, should be used if displaying the major component units in the basic financial statements will impact the readability of the financial statements. Let's look at an example to further explain this. So, located within GASB 103, Appendix C, you'll see here this example. It's a government-wide statement of net position. You'll note in the last column on the right, the government is presenting their major component units. In this case, it appears as if there is likely more than one due to the plural units label that's included. This financial statement, though, uses the entire page. Now imagine if in this case there was more than one additional column needed here to display all of the government's major component units. That means that in this example, the government has elected to utilize that alternative method and present the major component units in the combining statements. The combining statement includes a total column on the right, which ties back to the information presented on this government's government-wide statement of net position. Next up, the budgetary comparison information improvements. Note that most of the items listed here are not new to GAAP reporting, but the fact that these areas are now required is what we would be considering as new. The budgetary comparison information is now required to be presented in the required supplementary information, or the RSI. Before, there was an option to present the information in the financial statements or in the RSI. However, GASB noted that for consistency and comparability between governments, it would be beneficial for all governments to present the information in the same area. With that, there's now a note disclosure that will be required for the schedule. GASB includes suggested note disclosures in the published statement on their website. Additionally, budgetary comparison is now required to present a variance column for the original adopted budget and the final budget of the government, and a variance column for the final budget versus the actual activity of the government. Again, these are not necessarily new items for GAAP reporting. It's simply now that they are required to be included as part of the schedule. Here's another visual from Appendix C within GASB Statement 103. This is an example, though, of a budgetary comparison schedule. Note first this variance column. It represents a variance between the original budget and the final budget. The final column is the variance with the final budget and the actual amounts. With the implementation of GASB Statement 103, there is an expectation that significant variances will be discussed in the notes to the schedule. In this specific situation, this government would likely report in their note disclosure the variance between the original and final budget for those public safety expenditures. They're also likely going to be reporting on the variance between the final budget and the actual general fund taxes received. Under this statement, the GASB has prescribed the format for the proprietary fund statement of revenues, expenses, and changes in net position. While most of this was in place before GASB 103, there are a few new areas that we'll discuss. First, note that there is a non-capital subsidy section that's summarized by a total line item for the non-capital subsidies. This then moves into a new operating income and loss and non-capital subsidies line item related to that. The final new area is the unusual and infrequent items section. Let's break this down a little bit more though. Historically, GASB has allowed each government to set their own definitions when determining operating versus non-operating revenues and expenses. However, to enhance comparability, the GASB changed this with the implementation of GASB 103. Under GASB 103, non-operating revenues and expenses are described as subsidies provided and received, contributions to permanent and term endowments, revenues and expenses related to financing, resources from the disposal of capital assets and inventory, and investment income and expenses. These are the only items that can be reported as non-operating revenues and expenses. All other activity should be reported as operating revenues and expenses. Now, subsidies are a new concept with this statement. The GASB defines subsidies as resources provided or received that have the following attributes. There has been no good or service provided. The resources keep fees lower than they otherwise would be, and transfers. The appendix from this statement includes this statement of net position, which captures this new section. After the operating revenues and expenses, the statement has the non-capital subsidies section. You'll note that included here are the intergovernmental revenues reported. These are likely grants received. There's also the transfers in and transfers out for these funds. After that, note that there is an operating income or loss line item that considers the operating activities and the non-capital subsidies. The other non-operating revenues finally come here. Mostly, draw your attention to the fact that there are transfers in restricted for capital assets reported here, separately from the general transfers in and transfers out activity that is for non-capital purposes reported above. Under this statement, the improvements to the proprietary funds will be required to be brought forward into the statistical section. This is covered in this statement truly to ensure that items reported in the statistical section are still going to match to the proprietary financial statements. We're going to move into the next definition, which covers unusual and infrequent items. First, let's note that unusual and infrequent is replacing the terms special and extraordinary. So there will be no expectation to decipher when to use what term anymore. These situations will now always be called unusual and infrequent. Unusual and infrequent items are reported as the last items on the flow statement. So, unusual and infrequent items are transactions or events that are unusual in nature or infrequent in occurrence, which the GASB has clearly defined in this statement. Items are unusual in nature if they are abnormal or significantly different from the ordinary and typical activities of the government. Items are infrequent in occurrence if the event or transaction is not reasonably expected to recur in the foreseeable future. This pronouncement states that unusual and infrequent items are to be reported in their own category on the financial statements at the gross amount of each item. Additionally, when reporting an unusual or infrequent item, GASB 103 requires there to be a related note disclosure that describes the activity that each unusual or infrequent item is related to, as well as if the situation was within the control of management or not. So again, here's a visual from that appendix within the statement. This is the statement of revenues, expenditures, and changes in fund balance that covers unusual or infrequent items related to flood damage, down here at the bottom. Let's zoom in a little bit though. We can tell that flood damage occurred based on the fact that this is titled Unusual or Infrequent Item, Flood Damage. It looks like there was some grant revenues received in the amount of $2,500. It also looks like the cost to clean up was $10,000. This statement provides a clear view as to the financial impact that this flood had on the government. And that's the entire statement. For additional details, scan this QR code to head on out to the GASB website to view the GASB project page and any of the related documents available for this statement. Thanks for coming to watch our brief video over GASB 103. If you have any follow-up questions, feel free to reach out to us by using our help desk. If you submit a help desk to our office, your question will be routed to a GASB 103 specialist. We look forward to connecting with you soon.